Hello, and welcome to another update video about Bitcoin. Yeah, what a boring weekend it was. Really just sideways action, but hopefully we will get a little bit of impulsive action now that we're heading into a new trading week. We've seen some upside pressure over the weekend, some buying pressure, but the market is moving up in very choppy ways. I shared with you earlier today that there are three things I'm watching for today. I'm watching the yellow trend, well, it's not a trend line, the yellow, let's call it resistance line here, which basically was just sort of the key resistance, the crime scene when the sell-off happened on Thursday. And we had 1, 2, 3 touch points fake out yesterday, and now we're above that level. So maybe that means we should rather look at higher prices. Now, we are holding that at the moment. In my last update earlier today to our Discord members, I pointed out this is a key point. We broke above that key level, and it is a key level. We had a lot of times reactions to this level, 1, 2, 3, 4 times, and here as well it was just a fake out. So it is a key level, and if we can sort of hold above it, which at the moment the price is trying to do, this could lead to further upside continuation. The problem is we had so much choppy price action over the weekend. It's really just all looking very much corrective, making it difficult to really determine what the Elliott Wave count is on a smaller time frame. But that's why we're integrating. By the way, I'm leaving the support area where it is for now, because it could just be a high B wave. Yeah, there's always a B wave around the corner. But as long as we're holding key levels, I think we're looking at higher. I just need to highlight again that the risk for another test of support is very likely. The risk the risk is high, but for now we are moving higher, forming higher highs, higher lows, and we're holding above that key level. But obviously it's been a fight, and it still is a fight. This is not a sustained breakout yet. Yesterday, bulls, bears, okay? Today, yep, we try to hold above it, but you see the wicks. I mean, there's been a lot of fighting going on that level around 59,900, yeah. And now next I'm paying attention to the trend line and the green trend line, we said, okay, because if we break down again, the first key support will be the green trend line, 1, 2, 3 touch points there. So that's pretty much the structure at the moment. We're moving up in very corrective patterns as well. So it is possible. I will probably change the wave count later today for the next update, but I'm in preparation for our member live stream that starts very shortly. So, it doesn't make a sense. There's no point trying to force a new wave count here when the market hasn't provided clarity yet. The levels wouldn't change most likely anyway, so they stay where they are at the moment. Key support is 58,120 and 59,000. That's the key support area at the moment for any larger pullback. Yeah, and as I said, as long as we're holding above it, we are looking for higher prices in this diagonal pattern that could be unfolding. This could still be an overshooting B wave, but if I see any kind of impulsive price action, we're likely in wave C to the upside. I will wait until probably the next update to make changes on this, about the wave count, so that you have a fresh chart as we're heading into the new trading week. But for now, I think it's enough to understand we're holding above that key level for now. We're also holding above the trend line. I mean, to really get I would say, strong indication we're heading back into the orange support region there, we need to see a break below the green trend line. It would start with a break below the yellow line, a sustained break, but then a break below this green trend line, which basically has served as uptrend trend line since Friday, and that would be a good indication that the C wave to the downside has started. Really looking at microstructures, I mean, there is no impulse. That's why I cannot clearly say that we've started the move down, right? It's and then trying to track anything on the 5-minute chart is challenging anyway. I mean, maybe this here was a top in wave B, and then this is something like a 5-wave move down, 3-wave corrective rally, preparing for a move down into support. Yeah, but the structures are just too small to be reliable. So I think that's pretty much the same as me saying a break below the yellow line, because once we get a break below those intraday lows here, well, it's not the intraday low, but like around 59,730, that could increase the downside pressure for us to hit the green line. If it's then an internal third wave, like wave 1, wave 2, wave 3 down, 4, 5, well, that should lead to a break of that green trend line. Yeah. So that's what I'm watching. There's not really much clarity there in the very short term. It's more like, okay, look, we've got these levels. At the moment, we're a bit in no man's land. Okay, we're moving higher, but it is not really, let's say there is no great trade setup. Yeah. Don't think so. Not from an Elliott Wave point of view, not with this choppy, absolute mess that's developing there. We just need some solid impulses, or at least some clear structures where we have some decent pullbacks, after a nice rally. So something like this, we had a nice rally, we had a pullback into a support region, and we went higher. And now we just need to see when this rally ends, and because it's been respecting this trend line, a break below the trend line would be one such signal. On the flip side, a break above the red trend line would be further confirmation we're going up higher as the green trend line supports us on the way up. So they are the interesting parameters, in my opinion, that really matter at the moment. The Fibonacci support area is clear as well. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.